All right, let's talk Ciena, because they just dropped one of the most incredible earnings reports we've seen all season, and the market noticed. We're going to break down exactly how a huge story shift, all powered by AI, is completely changing the game for this company.
Just look at that number, up over 23% in a single day. This wasn't just a nice little earnings beat. No, this was a statement. This was the market waking up and realizing Ciena is playing in a whole new league now. Let's dig into why.
And really, you don't have to look any further than this quote from the CEO, Gary Smith. He's basically spelling out the entire thesis right here. He's telling us, hey, this isn't about one good quarter. This is about the very beginning of a long-term investment cycle. And it's all being driven by the absolutely massive demand for AI.
And the numbers? Oh man, they didn't just beat, they blew the doors off expectations. Adjusted earnings per share came in at 67 cents when the street was looking for 53. Revenue just sailed right past the estimates. And get this, their gross margin was even better than their own guidance. This is the definition of a beat and raise quarter, and it just screams that they have some serious momentum right now.
Now, to really put this move into perspective, you have to remember Ciena was already on a tear. The stock was up 73% over the past year, crushing the S&P 500's 18% gain. So this 23% pop isn't a fluke. It's like pouring gasoline on an already raging fire. So okay, we've seen the what, the big numbers, the huge stock move. But what about the why? What is really going on here? Well, it all boils down to two words: AI. Infrastructure. Ciena is in the middle of a massive transformation, going from just another telecom supplier to a company that is absolutely critical for building out the AI revolution.
And you can see it right here in who's buying their stuff. Look at this. Sales to cloud providers pretty much doubled this quarter. And Meta alone was 18% of their total revenue. This isn't some future projection. The biggest tech companies in the world are writing massive checks to Ciena right now.
But it's not just about selling more stuff. It's about what they're selling. Management was really excited about two industry-first wins. One is for a project to connect these gigantic, spread-out clusters of GPUs for AI training. The other is a whole new solution for managing data centers. The takeaway here? Ciena's not just selling parts anymore. They're becoming a deep, system-level partner in these massive AI build-outs.
So how are they pulling this off? What's the secret sauce? It's their tech. Think of it like this. Their RLS platform, that's like laying down a super advanced, flexible set of train tracks for data. And their WaveLogic 6 Nano pluggables, those are the bullet trains, screaming along at 800 gig speeds with the super low latency that AI absolutely has to have. That's their edge. And just when you thought the big hyperscalers were the whole story, management starts talking about a totally new customer category, a group they've started calling neoscalers, and this could be a huge new market for them.
So what are they? Neoscalers. We're talking about AI compute specialists, these GPU as a service providers, smaller, specialized data centers. It's a whole new ecosystem popping up around AI. And for Ciena, this is fantastic news because it adds another layer of growth. It's not just about a few giant customers anymore. It's a much broader, more durable trend.
Okay, so you've got this incredible AI tailwind at your back. What do? Well, Ciena isn't just sitting back and enjoying the ride. They're making some really sharp, decisive moves to focus the company and capitalize on this moment.
You can see that pivot crystal clear in where they're putting their R&D dollars. They're actually stopping development on some older residential broadband tech. Why? To take all that engineering talent, all that firepower, and aim it directly at their biggest AI opportunities, like their coherent optical systems. It's smart, it's disciplined, and it's exactly what you want to see.
Now, part of this pivot, and you have to mention it, also involves a 4 to 5% workforce reduction. Management was clear that this is about driving efficiency and making sure their margins stay strong as they grow. Basically, they're getting lean so they can run even faster toward this AI opportunity.
Okay, so that's what happened this quarter. But what about the future? Let's get into the guidance and what they're telling us to expect next. Their forecast for next quarter's revenue is really solid. But the number that really jumps off the page is their first look at fiscal 2026. They're calling for around 17% revenue growth, with gross margins getting even better. They're signaling to Wall Street that this isn't a one-quarter wonder. This momentum has legs. But the biggest bombshell they dropped wasn't even about revenue. It was about profits. Because it's one thing to grow your sales, right? It's another thing entirely to do it while becoming way more profitable. And this is just a massive sign of confidence. Management took their key long-term profitability goal, getting to a 15 to 16% operating margin, and yanked it forward. By a full year, they're now targeting that for 2026. That tells the market they have incredible visibility into their business and see a clear path to making a lot more money, a lot sooner than anyone thought.
Which brings us to a really interesting situation. This growing divergence between what the company is doing and what Wall Street thinks it's worth. Take a look at this. The stock closes the day up near $117, but the average analyst price target before the print, it was stuck way down in the low 90s. Now, sure, you're seeing some upgrades to 120, but the consensus is still way behind, and that creates this fascinating tension. Is the stock getting ahead of itself, or are the analysts just late to the party?
So what's our take? What's the trade? Let's get to the next call.
For us, it all comes down to this one question. Yeah, the market reacted to the fantastic numbers, but has it fully digested the story change? Does the market truly see Ciena not just as an old-school telecom company, but as a premier, must-have partner for the entire AI ecosystem? We're not so sure it has. And that brings us to the next call. Our rating on Ciena is a firm outperform, and the trade idea is simple: fade the skepticism. Our thesis is that those lagging analyst price targets are a rear-view mirror. They just don't reflect the new margin power Ciena has because of this AI pivot. So the action is a long position, looking for the stock to re-rate higher towards those new street-high targets around 120 and beyond. The catalyst? More of the same. As Ciena keeps executing, the analysts will have no choice but to play catch-up.
So that's our breakdown of Ciena's absolute monster quarter. What a story unfolding here. Thanks for joining us on Talk Tickers. And as always, please remember this is for informational purposes only and is not financial advice.